Hello, I'm Peter Arpin, and welcome to New England Business Review, the online mini-series that brings you business professionals that make a difference. We are very fortunate to have with us in this series AnnMarie Fiske, manager and owner of FISCAL Recordings, which is a bookkeeping and financial consulting company. Prior to venturing out on her own, AnnMarie spent over 11 years as a small business banking specialist, and during that time, she developed and managed over 2,500 clients and facilitated over $20 million in small business loans, including some SBA guaranteed loans, and she continues to help clients with understanding and facilitating these loans. In our series, AnnMarie is going to help self-employed and small business owners gear up for the tax season. So, AnnMarie, thanks so much for being with us. We appreciate it.
Thank you so much for having me, Peter.
So we're getting ready for the tax season. And could you start by telling us what a small business owner should do to start kind of reconciling their accounts?
First thing they should do is reconcile their bank accounts using a program like QuickBooks. Most small businesses use their online banking, which you can leave some things out, and so the best thing to do is take each bank statement, reconcile them each month, and make sure that all the accounts are balanced at the end of the year.
Now, do you find typically or traditionally there's some things that they leave out or forget or they should pay particular attention to? Or
Definitely. They should definitely check their banking fees to make sure that they haven't been charged twice or anything like that, or that they didn't leave anything out.
Those nasty bankers.
Yes.
Always charging, those nasty bankers.
know.
You would know about that, right?
I do.
I like to do billing, so no one has to tell me, but I know sometimes owners are behind a little bit.
They should definitely check all of their invoices to be sure that, they've gotten paid for all of the work that they've done. So if they've forgotten to invoice somebody, now is a good time to send those last-minute invoices out so that they can be sure that they're collecting on all their completed work.
And I think, again, sometimes there's some additional fees, services that they may have forgotten to bill right with the original invoice.
Yeah, sometimes they may have forgotten, to add up any additional accounts that they, or income revenue streams that they may have coming in from, eBay or PayPal or things like that, that they need to make sure that they've considered all of those.
Well, again, I would not forget, but as part of that too, they have to really get into recording all of their transactions properly and accurately, right?
Absolutely. So you want to make sure that you've taken all of your credit card statements, receipts, bank accounts, loans. Be sure that you've recorded all of those transactions in the books, because if you don't tell us what to record, then it's not recorded. So it's not income and it's not an expense or an allowable deduction unless the business owner has told us that.
Well, and I know business owners hate to hear this, but to do that, they kind of have to be organized and prepared and have all those things in files, right? So they all get into the reconciliation? Or?
Absolutely, yeah. So that goes right back to the bank statement and receipts, having all of these in order and having a good bookkeeper to help them with these processes.
Most important, right?
Yes.
The other thing is where I think sometimes business owners get tripped up a little bit, particularly, again, getting ready for the taxes, is really kind of how they categorize things.
Yes.
Is there confusion about that? And obviously, that's very important, right?
Yes, very important, because categorizing your expenses can mean the difference between a deduction or not taking a deduction. So a lot of the small business owners, they get confused with their Schedule C, but it is a good practice to go through the Schedule C, which itemizes all the deductions that you can take in order to maximize your allowable deductions, because if you put everything into just an other expense account, that may not be an allowable deduction. So they want to be sure that they can maximize all of their deductions.
Right. And again, they have to get things well prepared for the CPAs, which a lot of times you'll do as their bookkeeper, because they may not find it if it's not properly annotated, right?
That's right. So a lot of what the bookkeeper does is to categorize those while they're doing the reconciliation to be sure that they're put into the right categories, which is another reason why, if you're not comfortable doing that, it's better to hire someone to do that. And then we can always consult with the accountant on things that we're not sure of together.
Right. And the other thing too is I imagine at times there's some things that might get left out. I know you mentioned at one point even mileage sometimes, right? That they've got to track that well.
Mileage is very important because that is 55 cents per mile. It's a very decent deduction, and it's an allowable deduction. While you can't take your daily commute as a deduction, you can take the 55 cents per mile on any trips to a meeting, a client, or a prospective client. And that can add up to thousands of dollars every year, so that's a heavy deduction that they can take.
Some of the owners spend a lot of time on the road,
time,
right? Clients and a lot of that. I guess the other part of it, too, is not only getting invoices out, but collecting money and trying to get all that in by the end of the year, possibly not carrying a whole bunch of accounts receivable. Is that right? Or?
That is true, yes. You want to be sure that, again, that goes back to checking your invoices, making sure that you have all of your completed work in and paid for so that you increase your sales.
And that's a process, again, I know where you spend a lot of time trying to automate that process.
Absolutely.
For owners, right?
Right.
So that
Not forgetting any deposits. Did they forget to record anything?
Right.
All goes back to the recording and the reconciliations.
Okay. Now, this is the dreaded part that they probably don't want to hear, but they got to think about paying estimated taxes, right?
Yes, and that's very important because your fourth quarter estimated taxes are due on January 15th. So if you're not sure of how much you owe, the best thing to do is to pay what you paid last year. That's the easiest thing to do. Otherwise, you may have to contact the IRS, which most people don't want to do that because that might raise a red flag of some sort. So if you're not sure, pay what you paid last year or consult with your accountant. They can help you with that as well. But January 15th is the cutoff.
So that comes quickly. And then,
Yes.
Obviously, not paying the estimated taxes.
Yes, that can create penalties come April 15th, which you want to avoid that at all costs.
And those penalties can be substantial.
They can be substantial.
Okay.
I've seen even a $20 discrepancy turn into a $1,000
Okay.
fee or penalty.
So accuracy on that side. And in order to do that and pay estimated taxes properly, they really need to triple check, right? Triple check income, expenses.
Best thing to do is print down a copy of your P&L, your profit and loss statement. This way you can look at it and see if it looks reasonable, make sure that you can tell you've been doing the work along the year, be sure that you haven't left anything out, see if things are recorded correctly. You'll notice if there's any numbers that look too big, that's a red flag, so you want to go back in and check those, or you can see some different categories that might be lacking and say, well, I'm sure that I paid for some of my employees to have training or something that we may have forgotten. So it's a good way to check each category line by line.
And then again, with you and your services, you'll get a sense. You'll be able to look at it,
Right.
and whether historically it looks off or versus other companies that are in that industry, you could start to see maybe some possible discrepancies too, right?
They can do a year over year if that's easier for them so that they can see right away if something's jumping off the page at them that doesn't look quite right.
Okay. So then if they're able to get everything in order, get accuracy for the year that they are closing out, get prepared to file some estimated taxes if they have to, then they kind of have to turn their attention to forecasting and budgeting, right?
Yes, they should prepare a budget for the following year, and a very easy way for them to do that is, again, a lot of this hinges off their profit and loss statement. So if they just download their profit and loss statement for the end of this year to another program like Excel, it makes it very easy for them to add some simple calculations to the spreadsheet, and they can determine, if they want their revenues to go up by 10% for next year, they can have the calculation do that for them, or if they want to reduce their expenses by 5%, say. Or they can go line by line and reduce or increase as they see fit.
And again, that's where you come in, because you're seeing what other businesses are projecting, getting a sense of the economy, hopefully, using the right tools, right, to get some accuracy in that.
Absolutely, yes. And a lot of companies, they're not comfortable with an Excel spreadsheet, so I can also do that piece for them as well.
And I guess all of this also leads to how they have a banking relationship.
Yes.
Right? Because the banks need proper historical data, and they need some accuracy or some predictions going forward, right?
They do, especially if they're looking for some short-term working capital with a business line of credit, or if they need to purchase equipment, then they have to have all of their records in order, definitely. The underwriter will scrutinize those.
And again, that's a lot of your experience, where you
Yes.
helped a lot of small businesses go through that process and
Correct.
successfully get lines of credit, business loans, and things like that.
Yes.
And so your job is to continue to do that, in essence, to get them prepared and almost take them to the bank and take them through.
Yes, I
the
can go right
process.
to the bank with them, sit with them through the meeting with the banker. That way, if there's something they don't understand, I can explain it to them in more layman's terms, since I have so many years of experience as a lender. And a lot of times, once we submit the package to the bank, if the package ends up going through with an SBA guarantee, that becomes very intimidating for the client, because there's a lot of regulations and questions and concerns that they might have around the documentation that's required for an SBA guarantee with the bank. So I have lots of experience helping clients work through that process, complete all those documents in a timely manner in order for them to get it back to the underwriter, so that the underwriter feels as though they have a good handle on their management, because it hinges back to how they're managing the company. If they can't get this back to the underwriter in a timely fashion, that doesn't look well for them
Absolutely.
either. So.
And I think in the process of finalizing taxes and planning and looking at their relationship with banks, they really start to get a handle on their cash flow,
Yes,
current and future, which I know a lot of small business owners struggle with.
they do. A lot of small business owners, they don't like credit particularly. They want to work off their cash flows from operations, which isn't always the best thing to do. Best time to get credit is when you don't need credit. And I found that in the last few years, especially with the market and the downturn economy, that a lot of people got in trouble by not having a facility in place to help them through these rough years.
And for those that kind of missed out, they can start, though, now to build small lines of credit, credit cards, to rebuild, if they need to, their credit history, and to work towards a facility that will allow them to grow.
Absolutely, and that's why having all of the pieces in order and keeping everything clean helps me to come in, and I can give them some suggestions as to which parts they should, increase, or maybe they should start collecting more of their receivables, or they increase their sales, and then their bottom line, their net income. Do they have collateral coverage? All the questions that the underwriter is going to ask them, I can help them to prepare
And how they
their
control
financials
expenses.
for that, and expenses as well.
And their management team and so forth that they want to feel solid about. And then I think the other thing that you help owners with that sometimes they forget is really thinking about their retirement, their pensions, where that money will come from, even an exit strategy eventually, right?
Absolutely. What happens is, with my years of experience, I've come across some very trusted advisors in those fields, so I have a nice referral source base, I would say, to refer the small business owner to
Great.
an accountant, to an estate planning attorney, to a small business attorney, or to a financial planner to help them with these needs also.
Great. And for those of you who would like to reach AnnMarie Fiske, please call her at 401-419-2097. Now, the company again is FISCAL Recordings, and you can get her at fiscalrecordings@cox.net and fiscalrecordings.homestead.com. For all of us here at New England Business Review, we thank you for joining us, and we look forward to seeing you on our next edition. Thank you.
Thank you.